All right, man, let's go. Here we go. Here we go. Yes, indeed. Yes, indeed. Good morning, or good afternoon, good evening. A little bit of a setup. I'm not home. I'm still in Austin, so I don't have my monitor with me. If you could just let me know, how's the audio? How's the visual? I don't have the stream pulled up on my separate monitor, so I'm just basing everything off of my one screen here. So just let me know before we get started. Let me make sure I'm recording. Good morning. We're good? Cool. Cool. Let's go. Good morning. Buenos dias. We're going to get started in like 2 minutes. I don't want to waste any time. Let's go. What's good? Good morning. It's a beautiful morning. Beautiful Sunday. Back in the markets tomorrow. Tape reading. And then we live trading. Back at it. I'm going to send out that weekly forecast and all that when I get back home. Will you still live stream of course. Yeah, when private mentorship opens up next year, of course I'll still be live streaming. Like I said, the private mentorship is for people who just want like one-on-one focus, like undivided attention. And it's going to be the format is a little different. The Discord, I'm really just live streaming and doing webinars and stuff. But the private mentorship is going to be like a whole lesson layout. We're going to have modules. We're going to have certain things we're going to go over. It's like we're going to have a whole plan for those 3 months that we're going to follow. And we're going to measure our progress and all that stuff. So that's a whole different ballpark right there. But that's still got some months on that. I want to make sure that it's quality before I just put stuff out there, you know. What's up? Good morning. All right, it's 10:01. We're gonna go ahead and get started. I wanted to make today's webinar more of like answering all of your guys' questions. So we're gonna do half of just answering questions. I have a lot of new people joining in, but the first half we're gonna cover 3 different things. Today we're going over, look at my notes. We're going over the London close macro 1050 to 1110. We're also going to look at all the Asia setups that happened this past week. And we're going to look a little bit at the lunch hour framing setups during lunch. And then after we go through those 3 things, I'm just going to be taking questions up until 11 o'clock. And then we're going to get out of here and get ready for the trading week tomorrow. Real quick before we do that, let me pull up the economic calendar. I haven't even peeked at it. Vlog is going to be posted in a couple hours too, by the way. But let me see. What are we looking like this week? So Monday, obviously, tape reading stream. Well, we have a new schedule. So Tuesday, Monday through Friday is 9:30 to 12 o'clock. But let's see. Tuesday, high impact at 8:30. Wednesday, we have FOMC. In the PM, and I don't trade the AM session when we have FOMC, so that may be a tape reading stream. Depending on how the daily chart looks, I may do live trading, but we'll see. Thursday, Friday, live trading, so looking good. Wednesday is really the only questionable day, but Tuesday, Thursday, Friday, we're pressing buttons. So that's what it's looking like for this upcoming week. I have to keep this chat room pulled up on my phone so I can see your questions. All right. So I want to get through this a little quickly just so I could take on all your questions for the last 20, 30 minutes or so. But starting off, let's just go over Asia real quick. So Asia, I'm not going to go over the model. We're just going to walk through the setups that form. If you're new and you haven't watched the Asia model video, just go to my YouTube channel, look that up, and you'll have a better understanding, or you can watch this later. So this is Sunday's opening. Yes, you could trade Asia right after Sunday opening. So this is your new week opening gap, where we close Friday and where we open on Sunday. Take that range, draw it through. We trade down, initial sell side, which should be right here. So initial sell side, we form what? Relative equal lows, trading into the new day opening gap, more specifically consequent encroachment, which is midpoint of that new week opening gap. Drop down, rally up. This doesn't give you an entry, okay, at least not a fair value gap entry. I had this bullish order block annotated, 3 consecutive down close candles before the rotation lower. As we're crossing that opening price, okay, you can buy that. Sometimes I use that as an entry if I think we're really bullish and I don't think we're going to come back down. You can buy that opening price, stop loss below mean threshold, midpoint of these 3 down close candles. Initial buy side, your highest high formed between 6 p.m. 7 p.m. Bread and butter setup right there. And we've already taken out sell side. We've already worked into the new day opening gap. And then we get a nice low trending all the way into Asia close into midnight of the next trading day. So that's Sunday. Unicorn Queen, good morning. Let's fast forward. All right, here is Monday. All right, we rally up. Lowest low, that's initial sell side between 6 p.m. 7 p.m. Short little stab down there. Trade up. And did I trade? I can't remember if I took this. I don't think I took this one. But what's the model? We take out initial sell side, and then we're looking for what? Initial buy side above this high, or the new week opening gap, new day opening gap, which is this price level here. So lowest low, stab down right at 7 p.m., taking out the sell side, fair value gap. If you don't want to buy that, that's fine. Just wait. Displacement, another fair value gap here. Candle opens, trades down, institutional order flow entry drill, targeting what? Buy side liquidity or new day opening gap. Okay, that's the model. This is your highest high between 6 p.m. 7 p.m., but you can't be too demanding of that. All right, you still have to have common sense. There's buy side above this high, and you're trading into a new day opening gap. Look at the precision there, perfectly to the tick. Forms the high, then we rotate lower. So this is your bread and butter setup using the model. Clearing out sell side, targeting new day opening gap. Bread and butter model. And if you want to participate in this move going lower, there's your short. Volume imbalance, there's your short. Breakaway gap. And then just tears lower, reaching for other objectives. Balanced price range order block. All right, so that's Monday. Let's look at Tuesday. All right, this was a beauty. I traded this and posted the trade breakdown on YouTube. Your highest high between 6 p.m. and 7 p.m. is right here. We run out the buy side. Now look what we've done. We have this high exactly at 6 o'clock. This high, we run out the buy side. This high here, we run out the buy side. This high here, we run out the buy side. Relative equal highs, buy side taken. This high here, taken, we displace. So if our model is we're waiting for buy side or sell side to be taken out and we're targeting the opposite, in this case, we're waiting for buy side to be taken out and targeting sell side and the new day opening gap. Well, we've already done the damage up here, running out the buy side 5, 6, 7 times. Break down, that's a breakaway gap. You want to see that stay open. This lower one here, that's your entry. Trades up, go short, trade down. I use a balanced price range on the 2-minute chart. You can look at that on YouTube. I go short here, targeting relative equal lows, and I left one contract on, seeing if I could get this low here, which isn't guaranteed. That's before 6 p.m. I don't get it here, get stopped out in profit, comes back down, clears out the sell side, but that's your model. Clearing out initial buy side, you wait for a setup to take out the sell side or the new day opening gap. All right. We have examples for every single day this week, so let's go to Wednesday. And I traded this as well. All right, so same thing, following the model. And we live streamed this this Asian session for those who remember. Relative equal highs, buy side liquidity. This is your initial buy side. This is your highest high between 6 p.m. and 7 p.m. Relative equal highs, we run that out. Now, can you buy this going higher? Can you buy this going higher? Absolutely. But if we're following a model, what is the model? We run out initial buy side and do what? We wait. We wait for a setup to go short and target what? New day opening gap and possibly initial sell side liquidity. So the moment we tag the buy side here, you're patiently waiting and you have until 9 o'clock. So we're working higher. Okay, in the live stream, if you remember me saying I'm not interested in buying anything, I don't want to take it higher. I'm following a specific model that has rules. Working higher, working higher, working higher, trading into what? Rejection block. Highest up close price in the swing high. Take that closing price, draw it through. That's your rejection block. That's a PD array. Break down. This is a balanced price range here. Don't expect that to be traded to. Fair value gap. Institutional order flow entry drill. Break down. Fair value gap stays open. That signs a bearish order flow. I go short here. Targeting new day opening gap high. That right there is your model. That's your bread and butter setup. This short up here. This short here. Targeting new day opening gap. That's the model. That's a beautiful sell right there. All right, we have 2 more days or 1 more day. There's no Asia for Friday since the markets close at 4 p.m. on Friday. So last example here. All right, buy side liquidity, highest high formed between 6 p.m. 7 p.m. We run out the buy side. Now what are the rules? We're waiting for sell side liquidity and possibly that new day opening gap. So run out the buy side, you're waiting and all this, you're waiting. I took a trade here, was break even. Waiting, what do we do here? We form relative equal highs. That's buy side. We run that out. Fair value gap, that's a breakaway gap. Expect that to stay open. You want to see this used as an entry. Okay, it's kind of similar to the homework, which you guys are doing great on, by the way. I'm going to check the rest of the submissions too when I get back to Houston. But fair value gap here, we open, trade up, leaving this open, and you're holding out for what? New day opening gap or sell side liquidity. Okay, again, you still have to have common sense. What's this right here? Relative equal lows, way too clean. That's a partial. Going short here, trade down, trade down, trade down. There's your relative equal lows. You also have sell side underneath this low. Probably wouldn't have got filled if you didn't account for the spread. And then we just fall short of the new day opening gap by a couple ticks. No big deal. And then we rally. But plenty of opportunities to take partials. And then again, for those who've been with me for a while, you understand the concept of running down your equity. You go short here. This low's formed. Retrace. When you take out this low with this drop down, that's a partial. So what's this right here? Isn't that relative equal lows? So you're in a trade, okay? You have an open position, you're short up here. Price forms equal lows. As you run that out, you need to pay yourself. Take a partial. Come back up, trade down into what? Relative equal lows, that's a partial. And then you're seeing if you can get the high of that new day opening gap. You don't get it, it turns, no big deal. Plenty of opportunities to pay yourself. And that should be it, I believe. Let me see. Yep. That's it. Makes sense? How we feeling? We good? Questions before we hop on to London close? I want to get through this a little quickly so I could just answer questions for the last 20 minutes. When we're done Asia, can you explain institutional order flow entry drill, how to get in continuation trades when price takes out buy side, doesn't reverse, makes the market structure. Institutional order flow entry drill is really simple. Like, where is it at? What's it this day? Like right here. I'm expecting an institutional order flow entry drill when we have like this, a balanced price range. Single pass up with this fair value gap, single pass down. I'm expecting that to stay open. If we get a fair value gap here, I'm already expecting price to just stab up and sell off. I don't want to see us completely fill it in. I definitely don't want to see us trade back here. But let me see. As far as continuation trades, price takes out buy side, doesn't make a market structure shift. I might have to see an example of that. Again, continuation trade. Yeah, I might have to need like a chart example. But institutional order flow entry drill is just a simple partial entry in the fair value gap. And I base those really off of like breakaway gap. So if I have a fair value gap with a lot of momentum and I want to see that stay open, like say something like this, if I was long, or this is a better example here, consolidation, right? Consolidation, we get displacement during the macro, fair value gap. I'm expecting an institutional order flow entry drill. So I'm expecting, even if we don't have a market structure shift, like say this high wasn't taken out and we just formed a fair value gap like right here without taking out that high, because it's energetic, I'm expecting just a small drop, couple ticks, because I'm treating it as a breakaway gap. Get that there, rally. Is this always played, monitored on the 1 minute only? I'm sure you could trade it on other time frames. I just like the 1 minute, but price is fractal. So anything you see on the 1 minute, you're going to see on the 2 minute, 3 minute, 5 minute. It's the same thing. But you're going to find more entry opportunities on the 1 minute because like the 5 minute chart is a broader time frame. So there's going to be less fair value gaps and all that. So, just be mindful of that. Unicorn Queen, got you. Friday long trade, how do you know that the upper fair value gap would be an inverse fair value gap instead of a bearish fair value gap? Where is it at? If you're in a buy program, you want to see down close candles, SIBIs. You want to see that offer support. I don't want to see that send us lower. It's real simple. It's nothing crazy. But this is the trade we took Friday, or I took Friday, buying the fair value gap here. So you're asking, how did I know, or what made me confident to treat this as an inversion fair value gap? Well, it's because we're focused on the buy side up here. That's all it is. If I'm expecting buy side to be ran out and we're in a buy program, down close candles are supporting price. Okay, we traded down below the midnight opening price, below that 8:30 opening price, down close candle, bullish order block. We had SMT here. What else do we have? Dollar index was trading inside a 15-minute fair value gap, looking bearish. So if we're in a buy program, you don't want to see this send us lower. This fair value gap here, this SIBI, you don't want to see that send us lower. So every time I'm long and I'm aiming for buy side, I want these down close candles to offer support. I want this to offer support. If we had another SIBI fair value gap in here somewhere, I'm treating that as an inversion level because we're in a buy program and the buy side is the focus. So that's all it is. It's nothing crazy. Asia starts at 7 p.m. to 9. Inversion fair value gap is just a fair value gap that switches its role. Balanced price range is one fair value gap up, one fair value gap down, like right here. This is a balanced price range. Single pass down with this fair value gap, single pass up. So this right here, that's your balanced price range. Right there. One pass, one pass. Inversion fair value gap is just something like this, where you're in a trade, you're aiming for buy side, you want to see us get above it, treat it as support. Asia model entry forms at 10:50. Wherever it forms, it forms. The macros, I don't just enter inside of the macros, but if it forms in the macro, that's cool. But anytime between 7 p.m. 9 p.m. No problem. Brown Strat King. All right, I'll take one more question or two, and then we'll hop on to the London close. London close macro. Which one should you use? What do you mean? Which one should you use? Gotta be more specific. All right, let's go ahead and hop to London close examples right here. So just laying the groundwork first. 11 o'clock is London close. Okay, 11 a.m. That's profit taking hour. Okay, I always tell people if you're in a trade and you're holding through past 11 o'clock, you want to be scaled out of your position. Okay, majority of your position if you're holding for longer term targets. As you approach 11 o'clock, start taking profits because London close often brings a retracement or just a full out reversal, and we've seen that a couple times this week. So London close is 11 a.m. Okay, I call that profit taking hour because that's when you want to start taking profits and cashing out because that reversal / retracement is coming, right? 10:50 to 11:10, that's a macro. Okay, macros occur every hour. 8:50 to 9:10, 9:50 to 10:10, 10:50 to 11:10, 11:50, 12:10. Okay, those 20-minute increments, they occur every hour. But the specific one here, 10:50 to 11:10, is the London close macro. This is Monday's trading. If I can do this, okay, what have we been doing all day? Okay, and one of the functions of this macro is going to run on the morning session move. So ask yourself who has been making money in the morning, wait for a time to align, which is 11 a.m., and run against the people who've been making money. So Monday, Monday, obviously everybody's making money going short, okay? Buy stops are just resting above this high, and obviously this high here. So it's fine. We're going lower, going lower, going lower, going lower, going lower until when? 10:50 to 11:10, more specifically 11 a.m. London close. Get a reversal, breakaway gap, fair value gap, 3 consecutive or 4 consecutive down close candles. That's a bullish order block. Same thing with this candle, order block. Trade down. We run out the buy side, run out the buy side, run out the buy side, complete reversal, laying over the top of that morning move. Let's go to Tuesday. This day, little sloppy, but ask yourself who's making money, where's the liquidity from that morning session? Well, we've already taken out the sell side here, dropped down. Now where is it too smooth? This high and this high. Notice how this high is lower than this one, so somewhat relatively equal. This is sloppy in here. I would never trade this, but the logic's still the same. Fair value gap. Want to see the offer support? Why? So for the person who asks, why do I treat this as inversion fair value gap? How do you not know it's going to take you lower? Well, you have to have logic. If we already cleaned out the sell side, there's buy stops above this high, above this high, above this high. So we have 3 lower highs. People are trailing buy stops down. We've already done the damage taking out the sell side. We want to get in the buy program. We don't want to see down close civvies, send price lower. I want to see us get above it, treat it as support, because now buy side is my focus. This is nasty in here, but nonetheless, support, down close candle, starting to send price higher. Down close candle, 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 running out the buy side, just by a tick, and then we drop. All right. So this is why I say if you're short from up here, if you're short from here, if you're short from here, as you get to 10:50, 11:10, start scaling out because we're going to do this function right here. Lunch macro starts at 11:30. The London close macro starts at 10:50. Lunch and London close are 2 different things. So let's see. All right, same. This is a beauty. This is gorgeous. But all right, same thing. Who's been making money all morning? People going short, 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 lower. We're not running on any buy side. People are trailing the stop losses down here, here, here. Just trailing the stop losses down, making money, making money. Stop loss trailed here, stop loss trailed here. They're going short until what time? 10:50 to 11:10 profit taking hour. If you're short, if you're making money, you want to start scaling out as you approach 11 o'clock. Expect a retracement or reversal. Boom, small little fair value gap. Rally. This fair value gap here stays open. This fair value gap can't even reach consequent encroachment. That's bullish. Displacement. 2 consecutive down close candles. Draw it through. That's your order block. And again, for that person who asked about inversion fair value gaps, are we looking at this fair value gap to take us lower? Absolutely not. I want to see that treated as support. Why? Because we're in a buy program. All right. It was used as resistance here, but until what time? 10:50 to 11:10. I don't want to see this setting as lower because I'm focused on the buy stops trailed above this high, trailed above this high, trailed above this high. So we get above it, treat it as support, body staying inside of the inversion fair value gap. Perfect. Rally. You could buy it here, taking out the buy side above this high. That's beautiful. That's a beautiful London close, time delivery, algorithmic. That's perfect. All right. Same thing here, London close. So think about it. Who's been making money? this low, we drop down, clearing out the sell side, so sell side's taken. Where is it too smooth? This low here is lower than this low, so you have relative equal lows as you approach 1050 to 1110. Again, inversion fair value gap, because we have time behind us and we have relative equal highs. Do I want to see this fair value gap send us lower? No, we've already taken out sell side. I want to see us get above it, treat it as support. Small little fair value gap in here. Same thing with this SIBI. Okay, do you want to see this, do you want to see this take us lower? Absolutely not, because we're focused on the buy side. We're in London closed bodies, staying close to the mean, not mean threshold, consequent encroachment, but near the high of this fair value gap, which is small, but right there. All right, right there. Body staying above that, and then targeting the buy side above this high, and the buy side above this high, and then we reverse. Last example, and then I'll look at y'all's questions. I have nothing for Friday. In my opinion, this setup was the clean setup for the day based on the logic, fair value gap, targeting the buy side. Anything before that, in my opinion, was just chop, and then anything after that was just chop. So catching that nice move in the middle, that was nice. Friday was just eh. All right. Reversal pullback hour. Yeah, 11 o'clock is strong. It happens all the time. Breakaway gap is come before Institute. Breakaway gap is come before IOF. You want to see a breakaway gap, then institutional order flow entry drill, if that's what you're asking. New to Discord, highlight 10 o'clock. 10 o'clock to 11 o'clock is the main window that I trade. That's when I really try to find my setups, but I'm trading until 12 o'clock. Doesn't matter how far apart the candles are when locating a balanced price range. No, it doesn't matter. It's still the same logic. Change in the state of delivery. That's gonna take a whole nother webinar. But yeah, that's a little too out there. You discussed function London close, but can you explain the function, the algorithm at other certain times? We're gonna talk about lunch. Lunch does the same thing. Lunch hour has like the same function with London close as far as like running out liquidity and attacking buy stops. Yeah, 1050 to 1110. 20 minutes, 1050 to 1110 is your London close macro. But let's go to lunch. Yeah, order block, change in state of delivery. That's we're gonna need like a whole 30 minutes to talk about that, and I had to really get some examples ready in advance for that. Let's see, what's this, Monday? I need some water. I'm in this hotel. I'm not gonna drink the water they have in here, cause they're gonna charge me like 20 bottles or $20 for a bottle. We use breakaway gaps for a signal to sell. It depends on price. If you just get a displacement fair value gap, that doesn't necessarily mean buy it. There's other factors in play, but it's nice to see. Yeah, CISD, Fernando, change in state and delivery, that's two events. And honestly, if you're just now studying the 2024 playlist, you don't even have to worry about that. Like, just focus on fair value gaps or other PD arrays. Change in state of delivery with order blocks, it's a little out there. And you could get tripped up if you're trying to focus on that too soon. So I wouldn't even worry about that. But here we go. So lunch. Okay. Lunch hour, 11:30 to 1:30. If you're looking for higher prices, okay, let's say the morning session was bullish and you're still looking for higher prices, as you approach that lunch hour, ideally, you want to see sell side taken. You want to see us run against sell stops and then rally higher. Same thing if you're bearish. Okay, if you're looking for lower prices and a continuation lower, as you approach 11:30, you want to see us run out buy side first and then see a continuation lower. That's a classic signature because the lunch hour loves to attack liquidity and then continue its move. So this is an example on Monday. This is just a trending day. Okay, if you're looking for higher prices, it doesn't take out any sell side before going higher. It does take out this low, but that's before 11:30, so I'm not including that. But it's just trending higher, 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 higher. No big deal. Tuesday, right here. So classic lunch. Okay, if you're expecting higher prices, you want to see some sort of sell side taken, and I believe we had SMT here, if I'm not mistaken. But sell side taken here, drop down. We also have lows, sell side liquidity. Sets the stage for us to go higher. Fair value gap stays open. That signs a bullish order flow. Inversion fair value gap. Somebody asked about that. Are we looking at this to take us lower? No, because we want to see us get in a buy program. Leaving this fair value gap open, that signs a bullish order flow. That's strong. That's momentum. I don't want to see this take us lower. I want to see us get above it and do what? Treat it as support. Same thing with this fair value gap here. I want to see us get above it, treat it as support. Same thing with this one down here. So whenever I'm looking for higher prices, down close, fair value gaps, I want to see us get above it, support, and then rally. All right, so sell side taken before working higher. This is just another example, trending day. No lows taken out, it's just higher low, higher low, higher low, higher low, just trending. And obviously you can still trade that, but I'm looking for something specific. Okay, here, if you're looking for higher prices, you want to see sell stops taken during lunch. You have relative equal lows. Yes, this low technically takes out the sell side, but because it's like a shallow drop by a couple handles, that's not really convincing. I want to see us really drop down, taking out the sell side, so we get that here. Rally, come back down, fair value gap, mitigation block, low, high, higher low. Last up close candles and mitigation block. Draw it through, fair value gap, off to the races. Buy side liquidity target. And let's look at Friday. Friday was just a mess, like I said. After this trade that we caught in the stream, I wasn't interested in anything else. This was just, that was nasty. And that's pretty much it. So finishing right on time, actually. Leaves me 30 minutes to just go over questions, which is exactly what I wanted. So we went over all of Asia the past week, went over the 10:50 to 11:10 London close, and quick brief rundown through the characteristic of lunch, which is taking out sell side before going higher, taking out buy side before continuing lower. And then if you have a day where it's just trending, then it's just trending. It's no big deal. But I'll just take questions for these last 30 minutes, and then we'll enjoy the rest of our weekend, get ready for the markets tomorrow. What tool is used to highlight the hour from top to bottom? Highlight the hour? Highlight the hour. If you're talking about the indicator, it's in the Discord, the FAQ. Check the FAQ channel in the Discord if you're talking about the indicator. Yeah, check the FAQ. Do I use power of 3 for lunch? Yes, I use power of 3 for every session. Every session that I trade, I'm expecting power of 3 to form. Absolutely. Can we apply Asia London? Yes, I believe, at least for futures. I don't even know how gold is there. Let me see. Is there a new day opening gap for gold? I don't even know. Is this even the right index? Is there a futures contract for gold? I don't even know. Or is it? It's a CFD. Gold futures. I don't know if this is right. I don't know. Is GC? I don't trade gold, so. Okay, yeah, that looks more like it. Yes, you can trade the Asia model with gold. It's the same thing because you have a new day opening gap. So this is your closing price at 5 p.m., your opening price at 6. That's your new day opening gap. Asia model, still the same for gold, but gold doesn't look that volatile around that time, but the logic's still the same if you want to trade that. Lunch has the same function as London, but how about function AM? AM session, PM session is the same. It's just regular trading, but London close and lunch, those specific times of day usually run against liquidity, and then it'll do whatever it's supposed to do. But AM session, PM session, it's just regular. It's just trading, reaching for something on the daily chart. Power 3 for lunch, just take the opening price. You could use that 11:30 opening price all the way to 1:30. When I trade lunch, I like to trade 12 o'clock to 1 o'clock, just that hourly time window. So I'll take that opening price at 12. If I'm bullish, I want to see us open at 12, drop down, take out sell side, trade into a discount PD array, doesn't matter what it is, drop down, trade into a new day opening gap, and then ride the real move going higher. And then I want to see us close near the highs formed between 12 o'clock and 1 o'clock, and then that's your power of 3. Yeah, I'm still in Austin. My checkout is in about 2 hours, and then I'm going to head back. I haven't even been asleep. Like, I've been up editing this vlog. The vlog, bro, god dang, the vlog came out to 30 minutes long, but it's a good one, I think. So I've just been editing that. And then I was like, well, I got the webinar in like an hour, so I might as well just stay up and prepare for it. So gold, yeah, oil. Yeah, I heard oil moves nice. There's some people who trade oil in the Discord. I did. Thank you, Unicorn Queen. I did. It was a fun birthday weekend. I met a lot of cool people down here in Austin. You're gonna see in the vlog a lot of cool bartenders and random strangers. It was real cool. I didn't film everything, but like, it was fun. I did enjoy it. Thank you. Where do we find your vlog? I'm gonna post it on YouTube in maybe like 2 hours. So for y'all, what is it? It's 10:30 right now. It'll probably be like around 12:30, 1 o'clock. Thank you. Happy birthday. Yes, AM session, PM session is regular trading until you get to 11 a.m. And then PM session is regular trading until you get to 3:15. That's the market on close macro. I have videos on that on my YouTube channel where I'm trading the market on close macro. I think I have a video. Yeah, I even have a video titled How to Trade the Final Hour of Trading. So how do you know when the wick is big enough? 50%. It's just a wick. Like, it's just a wick. If it's a reasonable size wick, then I'm taking consequent encroachment. If it's a small little thing, then I'm probably not looking at it. It's nothing crazy specific, but if it's reasonable size and the context and narrative is there to support it, then yeah. Asia starts at 7 p.m. Asia session starts at 7 p.m. 7 p.m. to 9 p.m. Watch my Asia video on YouTube if you're still confused on it. Yeah, Asia's so easy. Asia really is. It's so repetitive, and it's because the rules are so defined. Like, it's 1, 2, 3. You're looking for this, looking for this, looking for this. If it's not there, you don't push the button. It's real simple. Contract rollover. Okay, I'll make sure to check the open interest before tomorrow's stream. Yes, the webinars, all webinars are recorded. In the Discord, there's a channel called Webinar Videos. You can watch all the previous webinars in there. OHLC, that's open, high, low, and close. Open, high, low, and close of candlesticks, OHLC. So up here on TradingView, you have the O, you have the H, you have the L, you have the C. That's the open, high, low, and close of whatever candle you're highlighting. Got 20 minutes, taking all questions. Speak now or forever hold your peace. Does the roll gap affect us with the Asia session? I don't know what the roll gap is. A rollover gap? I didn't even know that was a thing. I don't know about that. You just treat it the same exact way. After a breakaway gap, if there's a multiple fair value gaps, how do you qualify? Use a 2-minute chart. A lot of people ask, what if there's like 3 or 4 fair value gaps? Which one do I buy? If you're seeing 3 or 4 consecutive fair value gaps, just go to a 2-minute chart and it'll combine them. It'll be a lot easier to read. Like for instance, this right here. So we have only 2 fair value gaps, but let's say this is like 3 or 4 fair value gaps. Which one do I buy? Which one do I buy? Just go to a 2-minute chart. It'll combine that. Buy the high one. Expect this one to stay open. If you're still confused, don't know which one to buy, go to a 3-minute chart. There you go. But in the stream, we talked about we want to see this stay open. We want to see this fair value gap send us higher. Trade it down, took out the buy side. You don't consider the order block go up at 9:30. Yes, this is a bullish order block. We traded down into that. I'm pretty sure I mentioned that in the stream. There's a lot of discount factors that we traded down into. Soon, I'm trying to get to a point where as soon as you're dropping down, I just want to buy it down here because we were so much in a discount. Everything was lining up. I want to be able to catch it kind of like a falling knife, buy it right here, and then I'll pyramid in my like original entry. So this entry here, that would be like a pyramid for me. This candle opens, trades down into the opening price of that down close candle. Bullish order block, I want to buy that, another pyramid entry, and just go crazy and hold out for the buy side. But we'll get into that next year. ICT has videos on new week opening gaps and new day opening gaps. It's pretty simple, and those videos aren't long that he made. They're like 8 minutes. I don't trade Mondays because it's Mondays tend to be a little bit more difficult, a little bit more choppy. So I don't trade it. And from a business perspective, every Monday I just do a free tape reading stream on YouTube so more people can find me. I live stream on YouTube, and people who haven't heard of me come watch me for the first time. And most times they like what they see. So Monday tends to be choppy. I don't really like the price action we get on Mondays most of the time. Not every day, or not every Monday, but most times Monday it's a little choppy. So I just use that day to do a free stream on YouTube. How do you define a big range day? Just look at the previous days. If the previous daily ranges are like 400 handles, 500 handles, 350 handles in daily range, and then you get a day where the range is 800 handles, you just had a big range day. So it's just compare it to the other days. Why not wait for confirmation? I mean, you don't really need confirmation if you know what you're looking for. Confirmation is just like if you're playing it safe, but if everything's lining up and it's dropping down, you want to buy that. You want to buy when price is dropping. You want to buy when it's going down. Bold-faced candles like going against you. Like when this candle trades down and it's just a full black candle, like looking really bearish, I want to get to a point where I can buy that. I don't need confirmation because I'm already expecting buy side up here. And then use that as a pyramid entry in the order block. Maybe one more pyramid here in this fair value gap because we talked about we want to see this stay open. And I said I want to see this fair value gap send us higher. So that's the skill set that I'm working towards, just completely pyramiding, buying near the lows, and then holding out for a target. 300 handles, no, that's not really a big range, not for NASDAQ. How far can it go? Just target liquidity. Just target liquidity. Don't even overcomplicate it. Lunch hour, London is taking out buy side, it's taking out sell side. Don't even worry about the rest. 5K, appreciate it. I know that's crazy. There's no better time to hit 5,000 subscribers than on a nice little trip during the vlog. It's crazy, bro. Appreciate it. Thank you. Taking questions. We got 18 minutes. I want to make sure I get everybody's questions in before we get off of here. What's the market on close macro? 315 to 345. All right, chat room looking a little light. I think we're good. If we're good, let me know so that way we can get up out of here. But as far as teaching, pretty much covered those three things that we went over: lunch, London close, and then the setups during Asia. That's all I had. Go to sleep? Nah, I need to because I have like a 2.5 hour drive and I'm tired, but I'm good. And I can't sleep either because I have to check out in like 2 hours, so they're going to kick me out. I'll just play a ICT Twitter space in the car. That'll keep me awake. Let's skip to the part where he's talking about Vinny or something, or talking about CRT nonsense. Breakaway gas form after liquidity is taken. Will it be more effective if the logic is there? Like I said, you need bias, you need narrative, daily chart. You can't just see a fair value gap after taking liquidity and buy it. You gotta have some narrative behind it. TGIF. TGIF is just a 20-30% retracement of the weekly candle. That typically happens. TGIF can start forming during Thursday, but basically weekly candle, take the entire range, high to low, TGIF. So let's say we're trading near this region on Thursday or Friday. You want to start seeing a retracement down to 20%, which is this level, 30%, which is this level. So if you go like to your 15-minute chart, oh, I'm in replay mode, that's why. All right, so the high of the week was formed right here. Let's say the high of the week was formed on Wednesday. So let's say the high was formed somewhere over here. You want to see a retracement to 20% or 30% of that weekly candle on Thursday or Friday. That's all it is. How's that making you awake? Because ICT be yelling in them Twitter spaces. He be going crazy. Scalps, ES. What are your thoughts on scalping? Scalping's cool. Scalping can make you money if you know what you're doing. London close. Can you go over one more example? just rewind the live. I went over London close examples Monday through Friday this week. Just rewind. We're about to get off in here in like 10 minutes, so just go back and watch it. But I gave you 5 examples. Matter of fact, we'll just go like euro dollar. It happens in every market. Euro dollar. And then we'll go to 1050 to 1110. It's the same stuff. Ew, that's got Friday for euro was disgusting. Goodness gracious. We ain't gonna look at that. All right. Who's making money? People going long, 1050 to 1110. Reverse. If you're holding out for longs, you're holding out for longs. Take partials as you reach 1050. This candle here is 1050 on the dot. Rotate lower. Oh, Forex is nasty. Yeah, that's nasty. Same thing here. Who's making money so far? We're at relative equal highs. If you're going lower, you're chasing this going lower, 1050 to 1110. Expect a retracement or reversal. Equal highs taken out during that macro. Let's find one more. Let's go to pound dollar. Like this stuff happens on everything. Matter of fact, let's go to gold. Oh, Friday was just a trash market all the way around. Consolidation. Ugh. It's not clean, in my opinion. Trending just higher, higher, higher. Ugh. Gold is net, but this is when gold was consolidating on the daily chart, and gold just started throwing clean setups. So it's probably not the best instrument to use, because for the past like month or so, gold has been stuck in this consolidation on the daily chart, and a lot of people have been getting chopped up. We just now got some displacement. TGIF fib settings. There you go. ICT, screaming, but yeah. Relation to time, time of year, time of month, time of week, time of day. Just power of 3. It's all power of 3. Power of 3, macros, time of day. We just covered time of day, macros, London close, lunch hour, market on close macro. That's all key times during the day. And obviously he's saving some stuff for the books and all that. But like I said, you don't even have to get too deep in that. You don't even have to get all caught up in time of month, time of year and all that. Just a silver bullet model, all you need. Don't get too lost in the sauce. Jagged and smooth edges. Just jagged when you take out sell side and the damage has already been done. Like that was our, I just cleared off Asia. See if I can get it back. Oh no, I can't. Well, if you already done a whole, like we talked about in the Asia example, where we ran out buy side 5, 6, 7 times, we just keep making higher highs, keep making higher highs, keep running out buy side. That's jagged. And if you have relative equal lows, sell side, those levels are too smooth. So you want to target levels that are too smooth, and then levels that are made jagged, those should stay in place. Keep it simple, absolutely. Keep it simple. Oh man. What's a measured move? Measured move is just something like this. So let's say this is the weekly chart, just pretend it's whatever time frame you trade. It doesn't really matter. But measured move is just you take this low to this high, you run fibs on it, boom, boom. -1 standard deviation. Oops, wrong one. So measured move, you take your fib. This right here, -1, that's your measured move. So right here, it's basically this move here just doubled. So this same leg, price leg, multiply that, it's the same leg here, so that's a measured move. Measuring gap is the fair value gap in the middle of a price run. So if you have, let's say you have buy side target up here, like that's what you're anticipating price to draw towards, and you have something like this. Okay, the fair value gap that forms near midpoint of your swing low up to your anticipated target, that would be your measuring gap. So if you see a strong energetic displacement fair value gap and is near equilibrium from this high, or sorry, from this low all the way to your buy side target, your anticipated target, you could treat that as your measuring gap and expect to see that same move multiplied again. You know, Asia model Sunday through Thursday. This guy, we type in all caps. I can see your question, bro. It's all good. You don't gotta yell at me. Silver bullet's only the first fair value gap. No, silver bullet's not the first fair value gap. That's just, you're talking about the first fair value gap after 9:30. Silver bullet is just trading any fair value gap between 10 o'clock, 11 o'clock, 2 p.m., 3 p.m. Makes sense. Cool. Oh man, I don't drink coffee, but I need a coffee. Fair value gap at 9:30 has power. The first fair value gap that forms after 9:31 a.m. can be used throughout the entire trading day. So you can draw that through. It can be used during lunch. It can be used during the PM session all the way up to 3:15. That first fair value gap. Which, just watch the trade execution I just posted on my YouTube channel. We used it in the live stream on Friday. Somebody say 5K. No, you know what's crazy? In the vlog, I don't think I recorded it, but I met these random ladies at a bar, and then Like I told him I had a YouTube channel and everything, and then she was like, "I'll subscribe to you." I said, "Yeah, like I'm almost at 5,000." So I typed in my YouTube channel on her phone, and then like she was my 5,000 subscriber. Like, what are the chances of that happening? I was like, "Bro, you're officially like my 5,000th subscriber." And she's like, "What?" I'm like, "Yeah, that's crazy." So I literally saw my 5,000 subscriber like in real life as she pressed the subscribe button. That was pretty cool. Maca tea. I don't know. Is that the same thing as like the Is that the green stuff? I don't know. Is that like the green tea? I like boba and all that stuff. I like all kind of tea and all that, but I'm sure I like it. But yeah, at 20, we at 5K. About to get all the cheeks. I don't want no cheeks, bro. I'm good. I want this money. That's what I want. We'll focus on cheeks later. I'm trying to get this bag. Green and caffeinated. Okay, yeah. I think I know what you're talking about. My friends drink that. Crypto market. I think crypto's going to zero. That's just me. I think everybody buying Bitcoin is about to get wrecked. Jeez. Bruh. When you mention a specific hourly opening price, you're bullish, you're looking for power 3 displays below hourly. Bullish PD array. It doesn't have to be from the previous hour, just any kind of discount array. If we're dropping down into new day opening gap, fair value gap, daily wick, consequent encroachment, daily volume imbalance, order block on the 15-minute, it doesn't matter. We just need to trade down into something that makes sense. And then frame that power of 3. Yeah, zero. Just because the whole central bank digital currency, and I believe in the Bible and all that stuff. And once that comes out, I don't think there'll be a need for crypto, and then that's when everybody is going to get wrecked. That's just me, though. Nah, not because that's what ICT said. I believe it. I'm a free thinker. I believe it's going to happen. Because if they come out with one world currency, there's no need for crypto. We're all going to be on the same little thingamajiggy. But I think crypto is a good way to get everybody used to the idea of a central bank digital currency, kind of like warm everybody up. So that way when it comes out, you shouldn't be surprised, right? But I don't know. That's just me, my 2 cents. I think they fooled everybody with the Bitcoin explosion, where they gave everybody the stories. This guy made 10 million from his Bitcoin he had from 1975. Like, this guy's now a millionaire because he bought Bitcoin when it was this price. So now what's everybody else doing? I want to buy Bitcoin now. I want to buy Bitcoin now. I want to catch the next rally. I'm gonna be a millionaire and it's gonna go up to 100,000. It's too late. They already suckered you in. That's exactly what they wanted. They wanted everybody to buy it, because everybody wants to be a millionaire overnight. But that's not going to happen. It was a perfect way to get everybody sucked into crypto. And then you get that central bank digital currency. And then boom, boom, boom. Just like that. Bitcoin can't be controlled. Man, come on. Anything could be controlled. What? How can Bitcoin can't be controlled? That's funny. They can control anything. We have no control over nothing. They could shut down the stock market if they wanted to. We can't do anything about it. That's just facts. Bought it when it's 55,000. I don't even know what Bitcoin is trading at. I don't even look at it. I don't touch it. I don't have a crypto wallet. None of that. Time of month. I don't know nothing about that. Time of month. First week accumulation. That's too out there. I'm not really worried about that. But all right, man. It's 11 o'clock. About 2 minutes. Hopefully I answered most of you guys' questions. This is recorded, so it's gonna be available to watch. I'm gonna post a link in the webinar videos channel, so you can go back and watch if you joined late. or if you just want to rewatch it. We're back in the market tomorrow. Free live stream, tape reading stream. Obviously, I don't trade Monday, so we're just gonna tape read, and then we are. I just see your I got your friend request. Easy. I probably won't check it till I get back because I have to hurry up, edit this Instagram thing and post a vlog, and I'm trying to hit the road before I check out in 2 hours. So yeah, free live stream Monday, and then we're pressing buttons looking for a trade. I want to catch one good trade on Tuesday and be done for the week, and then just paper trade the rest of the week. So we'll see what we get. Love y'all, man. Appreciate it tuning in. Sorry for the late change on Sunday. We normally don't do webinars on Sunday, but you guys tuned in, taking your education serious, and I appreciate that. And be safe. I'll see you guys all on Monday at 9:30. Webinar dropping in a few hours. Not webinar. Vlog dropping in a few hours. I'm going to send that link out in a little bit. Be on the lookout. All right. See you guys Monday. Peace.